All right. Well, today, this is a big day today. We've got, it's March 12th, 2025. It is not only is it Bank of Canada rate announcement day, but we also have a special guest with us. We have Tom Davidoff, who holds the Stanley Hamilton Professorship in Real Estate Finance. He's the director of the UBC Center for Urban Economics and Real Estate and is an associate professor, Strategy and Business Economics Division.
You've landed on the Mortgage Life podcast, where we strive to bring you mortgage-related info that's easy to understand.
We have conversations with market experts to bring you timely updates, because there's one certainty in this industry: things change.
I'm Mindy Bodwin.
And I'm Pete Solomosi. Welcome to the Mortgage Life podcast. Tom, welcome.
Thank you so much for having me.
Thank you so much for taking the time on this. I'm sure it's a very busy day for you to help us understand what happened.
So we're going to turn it over to you, Tom. Today, the Bank of Canada announced a 0.25% rate drop. Just tell us a little bit about why they might have dropped their overnight rate 0.25%.
Right. So for borrowers, rate reductions are good news. If you have a variable rate mortgage, your payment probably won't fall. It might, probably won't. But what will happen is your mortgage payments will represent more principal pay down, less interest. So the cost to you of borrowing money is cheaper. Credit card debt should start to see some pass through there, auto loans, et cetera. For investors, it's good news. So, should stimulate business activity, which is great because we are swimming against a couple of really strong headwinds, particularly in the real estate sector. Headwind number one is these tariffs, which are potentially brutal, and I know we'll get into them. And the other issue is the reduction in immigration. Certainly in urban centers has had a really adverse impact on rents. So if you think about what was driving the housing market a while ago, we had rents rising very quickly due to lots of immigration, and we had super low interest rates and a really strong economy, in part because of trade with the US. Okay, trade with the US in major jeopardy, immigration cut back, interest rates had jumped. And so lots of headwinds for the housing market. And the economy generally. And so a rate cut makes people want to invest, spend money, not save money to get the higher interest rates. So very important for stimulating the economy. The only trick, and maybe we'll get into this some more, is with tariffs, the loonie has weakened. And when you cut your interest rates, that tends to weaken your currency further. And so you really do run the risk of inflation and just things costing more for consumers.
This is actually the 7th consecutive rate reduction we've seen since June 2024. That was sort of that turning point where we were seeing all this rate increase, and then it was kind of flatlined for a bit, and then we started seeing the decreases. And it almost felt like December, January, maybe in the spring, we were going to start seeing the rate reductions level off again. But this is a whole new scenario that has entered the playing field.
No doubt. There's the currency issue. We don't want to get our interest rates too far below the US rate, which is a risk, again, for the strength of the loonie. And you don't want to overheat the economy. But of course, today, the risk is not that the economy is going to get overheated. It's that we're going to enter into a recession. So it was clear there's going to be a rate cut. I might have thought as a central banker even do a surprise 50 point reduction to 0.5%. Usually they go in quarter steps. And again, I think it's the issue of departing too far from the US that probably stopped them from making a more major step.
So, Tom, you talked a little bit about the uncertainty regarding trade tensions. We talked a little bit about tariffs. Can we take it back to like Econ 101? Because I think it's nice for us, our listeners, to kind of hear about how these things all affect things. So in these economic times that are very uncertain, let's figure out like what exactly is a tariff and how does it affect things?
Right. So a tariff is a tax that affects some kind of imports. And it's up to a government to decide what types of imports will be subject to a tariff and at what percent. If you put a tariff of 1% on something obscure that rarely goes over the border, that would have almost nobody effect on anything. On the other hand, if you put a 50% tariff, say, on electricity going through the border, like Doug Ford was proposing, that could be a very big effect because people use a lot of energy, and 50% is a high rate. So Trump has put at 25% now on aluminum and steel going over the border. He has exempted certain goods. It's complicated relating to what is covered under the changed NAFTA, the Canada-US-Mexico agreement. I think Trump insisted that it'd be the U.S., Canada, Mexico, but
Yes.
whatever. So it's really not clear. Some Canadian goods are now subject, I believe, to a 20% rate. I'm not totally keeping up, but that's really bad. And so the issue is what happens is the good crosses the border. Custom agents come out and say, okay, what's in the truck? And I don't know the process exactly, but I think they say, okay, that box, yeah, that's full of stuff that's subject to a tariff. Tell us what the value is. What you're paying for it, and on top of that, you're going to give us the tariff. And it's the importer that writes the check to the U.S. government. So, Larry's Sporting Goods imports a bunch of tennis rackets from Alberta into Idaho, and Larry has to pay the tax. That doesn't mean ultimately, economically, Larry pays the tax, because he may negotiate with the Canadian producer and say, look, you've been charging me $50 for a racket. I can't pay it because of the tax, so I want $5 off. So some of that tariff economically gets paid by the producer. On the other hand, he's paying more for the goods. He has to make some markup in order to stay in business. So maybe he passes some of that tariff through to the consumers. And so who ultimately pays the tariff? It's going to be some combination of Canadian producers, American firms, and American consumers. But the balance and the mix of those effects is very important for the politics, because if it's, as Trump claims, it's all going to be paid for by Canada, that's great. America just makes tax revenue because they're collecting taxes and they can lower taxes on everybody else. If it's just, passed through to the consumer, what that does is it's like a sales tax. And, the thing is, that's mostly paid by working people. Now, to get a little into the political weeds here, Trump wants to pass really big tax cuts for rich people and corporations. And I think part of what's going on with the tariffs is he needs a way to pay for them. And so a sales tax is a way to cover those investment and income tax cuts.
So it's
So
interesting. Yeah, go ahead, Minnie.
we've talked a little bit about the Canadian goods being tariffed. Every day I wake up and the first thing I do is turn on the news, right? Because every day is a new something's being tariffed or not being tariffed or being extended or not extended or going, and like it's such a yo-yo at the moment. But is there a different impact? So we know our tariffs coming to us, but what about our goods that we're exporting?
Right. So it's the export goods that are subject to the tariff. So Canada sells something to the
Sorry,
U.S.
right.
Trump has slapped on tariffs. However, this morning, and I couldn't enumerate the goods, Canada has reciprocated. And that's very common, or retaliated, that when one country puts tariffs on another, the other country says, as a way of saying, let's not have a tariff war, you have to fight back, right? The bully punches you in the nose. You can play dead or you can punch him back. It's not clear which the better strategy is, but more commonly, countries tend to fight back with retaliatory tariffs. And so, yes, some U.S. goods coming into Canada are now going to be subject to a tariff, which hurts U.S. producers, it hurts Canadian firms that sell, and it hurts Canadian consumers who pay more for the good. But it does collect some tax revenue for Canada, and I think Canadians are very happy to see some retaliation, because I think many of us are angry. I'm a dual citizen, so I'm mad at myself, I guess.
So it's interesting because we talk about how these tariffs, how they affect. It's almost like it's passed on to the end consumer. So like the U.S. citizens lose, we lose. Everyone's going to pay higher prices for all these goods. But taking it back to how that affects perhaps the Bank of Canada's thinking, do those the uncertainty and the potential for those tariffs, does that affect their thinking and how they raise or lower the Bank of Canada rate?
Absolutely. And the first, I think, most important effect is the weakening of the Canadian economy. It's something like, I don't know, a quarter of our economy is exporting. A lot of that's to the US. So, your ballpark 20% of the economy getting smacked really hard. Because another margin is people just stop buying the goods that are tariffed, right? And, maybe they buy from America, they buy from another country that has a lower tariff. So, really bad for Canadian producers. That means they're going to lay people off. And I'm already hearing about layoffs anticipatorily. Also, as you mentioned, there's so much uncertainty every day. It's Trump really reminds one, and I hope it's not a sensitive thing here, but he reminds one of a drunken, abusive parent who comes in. You don't know when he's coming. He's going to do something crazy and bad. Maybe he'll make up with the flowers. Who knows? But something bad's coming, and you don't want to invest in that situation. If I've got $100,000 in cash sitting around, I'm going to hold it in cash. I probably don't want to buy stocks. I don't want to invest in something that I can't undo, right? If I set up a plant, I modify a warehouse, turn it into a production facility, that money's gone because nobody else can use that production facility the way I want to. So I'm only going to spend that $100,000 if I'm sure it's a good idea. So people are going to hold off on investment, which means they're not going to hire workers. And maybe they get into cash flow problems. They lay workers off. That leads to less spending and more layoffs. And you can get into a cycle that becomes a recession. And the central bank, obviously, one of their most important goals is to, they want low inflation, but they also want low unemployment. And so to avoid the weakening of the economy, they then lower interest rates. With lower interest rates, you say, oh boy, it used to be I wanted to save my money and not spend. But now because rates are low, it's cheap to borrow. There's no benefit to saving. So I'm going to spend instead of save. And that juices the economy.
So June 2024, we were in an inflationary state for different reasons. Bank of Canada did start lowering rates, and it seemed to work. Are rate adjustments as effective in offsetting inflationary pressures because of tariffs? Like, it seems like such an external.
That's a really great question, right? Where rate cuts or suppose you have inflation, where rate increases to fight inflation are most effective is when there's inflation because everybody's in a buying spree because they feel rich, rates are low, and so, fling money around, everything's great. And it's like taking the punch bowl away from the party. That's where rate cuts are most effective. Where you really question rate cuts is when you have a supply shock. So suppose there's inflation like in the 1970s because OPEC gets their act together and says, what are we all fighting? Why are we selling oil for cheap? We can band together and act like a monopolist and raise prices. That just makes everything more expensive. It's not because people are spending too much money. It's because an input has become more expensive. And rate increases can't really address that root cause as effectively as they can affect the root cause of inflation being everybody spending too much money. So now let's talk about tariffs, right? If tariffs come in, they do tend to raise prices. If Canada tariffs US goods, that tends to raise prices in Canada. The US tariffs on Canadian goods tends to make the loonie weaker relative to the dollar and other currencies. And that means anything we import costs more loonies, and that leads to inflation. So in that way, tariffs are inflationary, and the bank might want to raise rates, but it doesn't really solve the problem of the trade issues to raise interest rates. It just, dampens economic activity. So probably less effective. And you have the other side that raising rates to fight inflation means you're weakening the economy, and you do not want to weaken the economy when it's vulnerable because unemployment is a really, really bad outcome for people.
It's almost like you're reading my mind when you're talking about inputs, because I wanted to turn this back to the housing segment. And it's interesting how these things, like especially when they're talking about the raw materials like steel and wood, these are all things that people use in buying and building houses. So, how do you think these tariffs are going to affect things? Or put another way, where are the opportunities in the real estate market? Is there opportunities in new construction or existing inventory? And does it affect condos, townhomes, detached homes, or all of the above?
Okay, good question. So let me start with the input costs. I think the effects are ambiguous, right? Canadian steelmakers can't sell to the US, or they're going to be less interested in doing so because there's less profit to be made there, because the US buyers are going to say, if you're going to sell to us, we need a lower price because we have to pay this tariff. Okay, so that says, well, maybe I'll dump it in Canada. So we should be drowning in wood, steel, aluminum. So you might think that would make building a home cheaper. However, lots of inputs go over the border. So, for example, if I have a window, maybe it's framed with Canadian lumber, but it may have a glass plate made partially in the US and then brought and, put in insulation. And I'm going to really quickly run into the limits of my understanding of how a window is made. But you can see insulation, because of CUSMA or
USMCA. Let's just call it
USMCA.
NAFTA.
No, NAFTA, the old word. Anyway,
There we go.
Because of that, there's a very integrated supply chain. So stuff goes over the border back and forth. You can have multiple rounds of tariffs on inputs. So my understanding from what I've heard from people in construction, which isn't much, I think they think actually input costs are going to go up, even though you might think we're drowning in our own inputs. Certainly anything from the US, anything that goes over the border could be subject to a couple of tariffs. So I think it's actually going to make construction less attractive. Now, you asked what are attractive sectors to buy in real estate. If you're gutsy, it is a good time, probably certainly on the commercial side and the residential side, to buy an office building, a home, what have you, because I think you're going to start to see lots of sellers wanting to dump so that they can make cash flow, so that they can get some cash on hand. And you're not going to see a lot of buyers. Again, with the uncertainty and maybe a recession, there's just not a lot of people looking to plunk money down on an asset. So if you've got a lot of cash lying around, maybe it's a great time to buy. However, you kind of got to think maybe next month's going to be even better, unless somehow Donald Trump decides he hates tariffs, which is only going to happen probably if Wall Street beats it into him to a greater extent than it already has. So, segments that, lots of segments are going to get hammered, I think, over time. Certainly, condos in Toronto were already in trouble with, again, the immigration reduction making rent softer. You had people pay very inflated prices, anticipating low interest rates. And now these pre-sale construction condos are finishing. What's going to happen to the units? The developers need to sell them. People are probably going to walk away from their deposits. The developers can try to sue to make those guys complete. If they do complete, they'll be really hoping to sell or unload before they have to buy, or they won't complete. The developer will be hard up for cash. So there was already looking like an opportunity there. If you have Ontario's economy hammered by tariffs on top of all that, there is certainly the possibility of further reductions. And we haven't really seen that nasty cycle in Vancouver yet, but I wouldn't rule it out at all.
I feel like a key word at this time is uncertainty. There's economic models that can show what happens when a tariff is introduced into an economy. But is there a Trump economic model? This is, like I said, like every day there's a new announcement, a new extension. How much of that is going to factor into the greater economy? I even think about the psychological impacts.
Yeah, no, you're 100% correct to emphasize uncertainty in the economy. Businesses don't like uncertainty, right? Risk is the enemy of investment. And there's uncertainty on a lot of dimensions. We talked about who pays the tariff. Economists don't know. There's a lot of uncertainty. So when Trump put tariffs on China in Trump 1, there was evidence that the price charged by exporting companies into the US didn't change. So that makes you think it was all paid on the US end. But I just saw a paper that showed consumers ultimately, it wasn't so clear that consumers paid a lot more. They paid something more, but it wasn't obvious. Now, the methodology of that paper had some issues. So I would say I don't know how much US consumers will be affected by these tariffs, which means I don't know what the incidence is on Canadian producers. And I don't know how, so even if you told me the path of tariffs over time, I couldn't tell you who's going to be hurt the most. But I don't know what Trump's going to do. I don't know what Canada's going to do in response. I don't know what countermeasure Trump will take. I don't know how we'll, relate to trade with other countries. For example, we've got a huge punitive tax on EVs coming from China, which seems like not a great idea today because China has punished our canola and other farmers because of those tariffs. So you could have giant fluctuations in the pattern of tariffs over time. And so we don't know how big those will be. And even if we did know, we wouldn't know which segment of the economy will be hurt by how much. So yeah, giant fluctuations in prices of different goods. What the price of, I don't know, building a home will be in 6 months, no clue.
So, speaking on this idea of uncertainty, we're going to reach into Professor Davidoff's crystal ball because I know you must have one in your office. Thinking about April 16th, Bank of Canada's got their next rate announcement. Where do you think they're going to go with all this uncertainty? What's their thought process?
I'd be very surprised if there wasn't another rate cut. Again, the counter consideration is how weak the loonie gets, because how big will inflation be in the U.S. So there was just a good inflation read in the U.S., which makes me hopeful the Fed there will announce a rate cut. And again, you don't want the concern is that Canada's rates are too far below the U.S. That leads to currency depreciation. So my best guess, another 25 point rate cut. I think given this uncertainty, the strong medicine of a 50-point rate cut, I don't see as likely. But if currency concerns dominated, I'd be, it wouldn't shock me to see no change. Who knows? Maybe, well, I will say I would be very surprised if the risk and uncertainty surrounding tariffs weren't still stinking up the economy a month from today.
So I'm a first-time home buyer. I don't know anything about mortgages. I'm looking to purchase my first home. Don't really understand the difference between a fixed versus a variable. Risk tolerant. I'm young. Where is the greatest opportunity in the mortgage market?
Yeah, I think rates are likely to come down a bit more, probably. So I think a variable, usually variables are cheaper than fixed. Today, I'm not so. You guys would know better than I on a 1 year variable versus or a 5 year variable versus 5 year fixed. What the rate differential is? You can tell me, but I haven't looked that up recently. Historically, you're better off with the variable. Today, I think you probably are because I think rates are going to come down on the fixed, and you'll regret having taken it fixed. But as we discussed, there's no crystal ball available. And, there's a world in which tariffs are highly inflationary, and you even see rate increases from here. So, I think probably take a variable if you're comfortable and feel like if rates go up. Again, your payment likely won't go up depending on which bank you're going with if rates go up, but you will do less principal pay down or amortization. So, I probably lean that way. Personally, I've always taken fixed rates, but I've been wrong almost every time I did so. A couple of years ago, I took a variable, and that was a mistake. So I'm not sure I've ever gotten it right myself, which only goes to show it's very hard to beat the market, right? Fixed and variable rates are priced in a way so that banks and consumers expect one to be as good as the other. Because if a fixed was much better than a variable, everybody would take fixed, which would push up the rates and push down the rates by supply and demand on the variable. So, you're probably okay with any maturity. The key is to go to somebody like Peter or Mindy and really push them around, shop around, educate yourself, and get the best rate that you can.
Yeah, I think today's rate announcement actually brings like a 5 year fixed and the 5 year variable pretty much in line.
Yep.
And that it hasn't been that way for several years. So definitely an interesting conversation.
Well, and I think in light of all that talk of uncertainty and headbutting, I'm kind of reminded of Rodney King. I think it was Rodney King that said, "Why can't we all just get along?" So, Professor Davidoff, I want to thank you for your insights, your thoughts, and using your crystal ball, bringing it out for us today. Really appreciate it, and we'll be sure to talk to you again.
My pleasure. Thank you so much.
Thank you. This is The Mortgage Life.
We look forward to continuing the conversation.
So come back and listen.